Hi class, today we're going to look at chapter 4, problem 5B, and we're going to be doing adjusting entries. So bear with me while I open up Cengage. Okay, you should be able to see the Cengage screen now. And let me see if I can get this up where we can talk about it a little better. What we're going to be doing is we're going to be continuing problem 4-5B, and we're going to be working on adjusting entries this video, and the adjusting entry information is in requirement 4. At the end of April, the following adjustment data were assembled, and they want you to analyze and use this data to complete parts 5 and 6. So what we need to do first of all is we need to analyze the data, and then we need to record it in the form of adjusting entries. Your adjusting entries are going to go into the journal. Notice we're starting with page 3 this time for our journal. And let me see if I can move this out of the way so we can see a bigger screen there. So we want to analyze each one of these transactions separately. And so first of all, they're telling us in transaction A that you had some insurance that has expired during April, and it's $350. So what that is an example of a deferred expense. If you'll remember, a deferred expense is an expense that you're going to put off until the time period that it belongs in. Deferred expenses are sometimes called prepaid expenses, and they just need to be adjusted at the end of the period. So prepaid insurance is one of those accounts that we would need to adjust at the end of the period. Since we know what the insurance has expired in this transaction, since they've told us that the insurance that's gone away or used up is $350, then we simply would debit our insurance expense account, and we would credit our asset account prepaid insurance for the amount that was used. And the amount that's used is $350. So this is the adjusting entry to record that the insurance has expired. We're going to reduce the asset account called prepaid insurance. To reduce the asset, we would credit it. We're going to increase the expense account insurance expense. And to increase the insurance expense, you would debit. Now in B, they tell you the supplies that are on hand. What that means, that's what you've got left over. So you probably need to take a look at your ledger account to see how much supplies that you have on hand now, which would be the ending balance in the supplies account. Or you could look at your unadjusted trial balance and pick up the amount of the supplies from that. In other words, we need to know what the unadjusted trial balance is for the supplies account. So what I'm going to do is I'm going to pick up my Excel spreadsheet. I've kind of made one up for you here. And I hope you can see this right now. Let me just check just to make sure. Okay, I think you can see that right now. And I've created a supplies account, T account here, and I put the unadjusted amount in there. And that comes from the unadjusted trial balance. They told us that the supplies on hand, which is the adjusted trial balance amount, was 1,225. So what we have to determine is how much of our supplies account went down. So we need to reduce our supplies account to show the difference between the unadjusted amount and the ending balance. So I'm going to take the unadjusted amount, I'm going to subtract my adjusted trial balance amount, or what I had left on hand, and that's going to tell me exactly how many supplies I've used. This is my adjustment that I would make for my supplies account. So if my supplies account is going to be credited for $2,800, and because supplies is an example of a prepaid expense, which is a deferred expense, I'm going to have to create an account called supplies expense and debit it for the $2,800. So I've got a credit to my supplies, and I'm going to debit my supplies expense, which I did not put down here because I didn't think you needed to see that. The important part of this is, and we'll stop sharing this, and I'm going to go back to my Cengage account, and we're going to look at the journal entry. What you're going to record here is a debit to the supplies expense account. You're going to record a credit to the supplies account, and the amount is going to be the used amount that we found in the T account that I just showed you, and that amount was $2,800. So 2,800 is going to go here. The next transaction has to do with depreciation. And we always debit depreciation expense, and we always credit accumulated depreciation. Remember, accumulated depreciation was your contra asset account, and when we credit it, we're going to increase it. Our depreciation expense, of course, is an expense account, and when we debit it, we are going to increase it. So my depreciation expense for the office equipment is going to be a debit for $400. We'll have a credit to the contra asset account, accumulated depreciation. Then we'll move to the next transaction, which is saying that you have accrued the receptionist salary at April 30th of $275. This is an example of accrued expense. If it's an accrued expense, it's an expense that we know about, that we haven't recorded yet, but needs to be recorded so it can be updated properly so that we can prepare our financial statements. So the salary expense account is going to be debited for $275. And accrued expense is part expense like we've got here, and it's also part liability. So our salaries payable account would be credited for $275 because the definition of accrued expenses is an expense that's incurred during this period of time. That's why we debited the salary expense. And it's also an increase to the liability account that we call salaries payable. Accrued salaries just means we need to record them in this period so that we can match our revenues with the expenses in this period. We're just not going to pay them till next period when it's payday. The next transaction that we need to look at is rent that's expired during April. You'll remember that we put our rent in the transactions above in the prepaid rent account. Right here on April the 1st, this is where we debited our prepaid rent. So we had it all in prepaid rent. Now it's at the end of the period, and we know that 2,000 of that has expired. So what we want to do is we want to show the amount of expense that we've incurred. And the rent expense that we've incurred is the amount that has expired, which is $2,000. So 2,000 is going to be debited to my rent expense account. Since this was originally recorded as a prepaid account, our prepaid rent is going to go down by 2,000. Because when you have a deferral, a deferred expense, and this is an example of one, our prepaid account went down and our expense account went up. You remember, it kind of has the seesaw effect if it's a deferral. And the last one has to do with unearned fees. And when you see the word unearned, you know it's a liability, number one, but it should also be a signal to you that unearned accounts are what we call deferred revenue. All deferred revenue is some type of unearned account. So we've got unearned fees here of $23.50, and that's the balance in the unearned fees at the end of the period. Now you can see here that we created a transaction somewhere in here, right here, where we credited our unearned fees. So right now it has a balance of $9,400 in the unearned fees account. You could get that from your unadjusted trial balance. And I'm going to stop sharing this for just a second. I'm going to share my screen with you on the T accounts that we were looking at a few minutes ago. Over here, and I've got it recorded as unearned rent, but I think they had it recorded as unearned fees. So let me change that right quick to unearned fees. And so this is the name of the account. All unearned accounts are liabilities, so they have a credit balance. So what we know about this transaction is that the unadjusted trial balance amount was $9,400. They told us in the additional information that $23.50 was the adjusted trial balance amount, or it was the balance amount at the end of the period, is what they told us here. So to find the adjusting entry portion of this, I'm going to subtract my adjusted trial balance amount, or the ending balance amount, from my unadjusted trial balance amount. And that's going to give me $7,050, which I've debited to my unearned fees account. And I have to have a credit that goes with that. So I'd end up crediting my fees earned account. So my unearned fees is going to be debited for $7,050. So if you'll hold on just a second. My fees earned would be credited for $7,050. And it might be a good idea to check your work now. So I'm going to click on check my work. And I'm going to see what they've done here. All right. So all of these are my adjusting entries. And so all of them are correct. And so, of course, the next step would be to post these adjusting entries to the ledger. We're going to post these to the same ledger that we were using a while ago for our original entries. So if you'll bear with me just a minute, I'm going to write this down. It might be a good idea that you write it down, so I'll have something to look at when I flip back and forth between the shared screens. So I'm going to go away for a minute, and I'm going to post this first transaction to my ledger. And I think you know how to post, but I just want to make sure, I just want to drive this home with you. You've got to post all of these so that you'll know what the ending balances are before you prepare that adjusted trial balance. So I'm going to stop sharing. I'm going to go back to the Excel spreadsheet that we had. Oh dear, let's see, maybe there it is. Okay, and you can't see that, it's telling me that. So hang on just a second. Let me see what I can do to make that work. I'm going to pause my recording for just a second. Okay, I believe I'm straight now. So let's see. Okay, so you should be able to see the ledger. And what we're going to do is we're going to add to this ledger that we've already created. We've already been working on it for our original entries. We're going to add the adjusting entries to this. And the first type of adjusting entry is your insurance expense. So I'm going to go all the way down and I'm going to find my insurance expense. And this is going to come from journal page 3 this time. And we're going to debit our insurance expense. Notice I'm on the item for adjusting entry here. This is a type of adjusting entry. I'm going to debit this for $350. And that's going to give me a debit balance in this account. And then I'm going to go back. I'm going to pick up my 55. And I'm going to go back to my journal and I'm going to enter in my account number in so that we can show that we have posted to the insurance expense account. So I'm going to stop sharing this with you. I'm going to do a new share. You should be able to see this. And right here at insurance expense, I'm going to put in the account number. And I forgot to look at the account number, but the account number is on your general ledger. It is also up here, if you forget, it's up here under insurance expense, which is 55. $55 goes here. And then I'm going to go to my prepaid insurance in my ledger, and I'm going to post that. So I'm going to have to stop sharing with you again, create a new share. And we're going to post to the prepaid insurance account. So I picked up the wrong one. So hang on just a minute. I'm going to stop sharing. Isn't this fun? Okay. Now I'm at my ledger. I'm going to go to my prepaid insurance. I'm going to go to my adjusting entry. This is coming from page 3 of our journal. I'm going to credit my prepaid insurance for $350. And then I'm going to pick up the account number, which is 16. I'm going to put that in my journal. So I got to stop sharing this with you. Go back to the journal. And we put in the account number for prepaid insurance. And again, I forgot what the insurance account number is, so I'm going to look it up. 16. And I see a mistake up here, which I didn't catch a while ago. Okay, accounts receivable is not 2-1. It's probably 1-2. There we go. Fix that up. 2, wow, I saw it flashing there. All right, and then you post the rest of these just like I've done this one. So I think you know how to post. So I'm going to go ahead and I'm going to stop sharing this with you. I'm going to fix it and I'm going to post everything up because it takes a while to do that. And then I'll come back and we'll prepare an adjusted trial balance. So we'll stop sharing for just a second. I'm going to pause the recording. Okay, now I'm going to share my screen with you so that you can see the recorded journal entries in Excel. So this is your general ledger. I'm going to take the ending balances of all the general ledger accounts and we're going to copy them to your unadjusted trial balance. So the ending balance of the cash account, I'm sorry, not the unadjusted trial balance, but to the adjusted trial balance, because we have prepared adjusting journal entries. We've copied them into the ledger now, and now it's time to prepare an adjusted trial balance. So all the accounts in the ledger are going to go on the adjusted trial balance, starting with your cash. The $43,535 is going to go in as a debit because cash is an asset account. It's going to have a debit balance. The ending balance in your accounts receivable account. So we'll scroll to my ledger account. We'll look for accounts receivable. It's right here. The ending balance is $17,790. The supplies account, ending balance, after we posted the adjusting entry, is $1,225. My prepaid rent, is $4,000 after the adjusting entry has been posted. So $4,000 is going to be debited to my prepaid rent. My prepaid insurance is $38.50 after the adjusting entry. So $38.50 is going to be copied into the adjusted trial balance. The next account is office equipment, and it's got a balance of $20,000 that we're going to bring down. And then we're going to look for accumulated depreciation, which will have a credit balance. Accumulated depreciation has a credit balance of $400. My accounts payable balance is $1,600. My salaries payable would come next. Salaries payable is $275 as a credit balance. My unearned fees is $2,350 after we've adjusted it. $2,350 is the balance that's still in there. Then our capital balance is still $50,000, it's unchanged. My drawing account balance is $18,000. My fees earned after it's been adjusted is $64,550. Your salary expense is $3,575 after it was adjusted. $3,575. And then your supplies expense was $2,800. Your rent expense was $2,000. depreciation expense. It's 400. Insurance expense. It's 350. And a miscellaneous expense is 1650. And then we're going to total all these up. We're going to total this side up. And the two are in balance. And so that's all we needed to do for our adjusted trial balance. The next step is to prepare your financial statements from this adjusted trial balance. So I'm going to stop sharing and we're going to do us a new video for that. So see you next time. Bye-bye.